Okay, if you can see the screen and hear me, can you just type in okay? And I know it's working. We should be recording. Beautiful. We should be recording as well. So, I'm going to jump right in. Now, we're going to kind of go through the PowerPoint quickly. PowerPoint has been downloaded right to the download area. So you should be able to download that because I want to kind of get through this and then look at some earnings. There's some interesting setups here this week. Anyway, today, of course, is Thursday, May 24th, 2018. So I do want to welcome everybody to the webinar. Now, remember, Monday is a holiday. So markets are closed for Memorial Day weekend. You have a nice long weekend. So I don't know, tomorrow may be a kind of a slow pre-holiday trading day. So I don't know. I'm a little suspicious about that day before a holiday, a long weekend, especially when especially now going into the summer. But anyway, let's jump right into the long-term charts. The monthly, you can see the upper level is 2,600 roughly. Here it is on the 3-month view or 3-year view. So you can see again what's happened here is the market got above it, came back down, and has essentially held above the upper band. So again, the bullishness is still in the market. And again, we look at the Dow, 22.9 roughly. We're about 2,000 points above that. And here it is on the shorter term 3-year view. And you can see with the Dow, it never even got back to touch the upper band. So again, it's kind of interesting because if we look at this, that bar may have closed above it, but certainly this bar did. And what's kind of interesting about this is buying the breakout above the upper band, with a tight stop, got you into this bull leg. And, most people would be going, and I know a lot of pundits are saying, well, market's overbought. There's no question this market is overbought. But you know what? You got to stay long until we actually have a bona fide reversal. And to me, that bona fide reversal has to close below the upper band on this longer term chart. Okay, here's the comp, roughly 6,800. You can see we're about 600 points above that. Here's the shorter term view. And again, it's interesting because you look here, here's the close back in January 2017. That level was about 5,500. So this market's gone up about 2,000 points since that level. And, let me just do a quick calculation here because I'm not that good anymore. That's a 36% gain since the breakout. Now, the question is, would you have done that, okay, and just simply traded to the long side? That's the million-dollar question. But you see, what I find interesting about these bands is that, quite frankly, had you bought on that breakout with a stop underneath the low there, every month you just keep raising the stop, right? So this carried you all the way. That's basically what, a 1.5-year move buying that breakout. And we'll look at the Qs later because, obviously you're not going to trade the comp, all right? But you could trade the Qs because it's a little lower price. So it'd be interesting to see what the price of the Qs was back on their breakout. Anyway, here's the crude oil. Mid-band is 56.73. We're above it. And crude has been kind of doing everything we expected it to do. Here's gold. Again, breakout above the upper band on the left side of the chart. We've got back inside it, and now we're starting to sell off. So this month's close should be very interesting on gold. As you can see, here's a 3-year view, upper band 2,063. And here's Apple, okay, upper band 162. Here's the shorter term view, 162. So we're still about $26 above that. So it's interesting, you know, on Apple, using that theory, there's the close above it, right? And that price level is about what, 140 ish. So Apple's up about $48 since then. And by the way, if you had bought here, right, on the breakout above or the close above the upper band there, your stop would have been here. Okay, so and if you moved the stop to under that low, you know, you really didn't lose all that much. I mean, you certainly made way more over here than what you would have lost on a tight stop there. Kind of an interesting concept of buying above the upper band. But to me, that's how you can kind of use these bands as well. And obviously, we're using it to measure the fact that the market's really overbought. But, you know, we have to stay long until we see that reversal. Anyway, here's the 60-minute chart. And these are our price levels. And I thought, by the way, I thought yesterday was really fascinating because the market held, you know, every time it seemed to look, I looked at the market yesterday, it seemed to be flirting with that 27.15 line. And at one point, I looked at it and it was sitting right on 27.1488. And as you can see from this chart, it got slightly under it. And then we had the Fed announcement, it just screamed up. And it almost hit the 27.34 line. The high for yesterday was 27.33. So kind of interesting. But I think the pertinent facts here are, you know, you can see here that the 60-minute chart has been in an uptrend, crossed into an uptrend back in May, early part of May. Now you look here at the 30 followed on the 11th. So, you know, down here you see three incidences since that bullish cross where the 30 was oversold. Now here's the VIX. Now again, the VIX is making me concerned, obviously, because we are back down to a chief long-term support line, okay? As you can see from this chart, we closed yesterday at 1258. Yesterday's low was 1259, so it was, what, a point underneath the 1250 line. But again, you look at this chart, right? We had the bearish cross back in the middle of middle of April. All right, so at that point, any rally really could have been sold. Or the corollary to that is that any time it met resistance, you could have bought the market and continued to trade long. But you can see we had really two incidences where that occurred. Actually, a couple. We had this here. There, it stalled right at the mid-band. And then just a few days ago, we had that overbought condition at roughly 15. But again, now that we've dropped down to the 12.25 level, you know, we have to be mindful that a spike here could occur. We look at the 30 is, you know, completely downtrending as well. It has been for a while. Now here's the GDX. The GDX just crossed down, okay? I do expect the GDX to sell off. And here's the 30. So you can see the 30, I don't even know if this crossed to the upside, but excuse me, they were very close. So again, we have the 30 and the 60 in a downtrend. So selling overbought conditions short term would make sense. Now here's the diamonds, okay? Now again, I'm showing the diamonds because I think it's a little bit easier to read the levels as opposed to like 25,000. You know, here's 250 on the upside. Yesterday, it came back down to 246.88. So if we look at this, the diamonds have gone basically 1, 2, 3, 4 levels up. So again, even if we pull back, I wouldn't expect the pullback to drop below 243.50. There's the 30 cross, same day as the SPY. And then here's Apple. Okay, Apple crossed to the upside on the 7th. All right, here are the pertinent lines we're looking at, 187.5. It's been kind of snaking around that 187.5 line. Next target up is 190.63. Here's the 30-minute an uptrend. And then we go to the XLE. Now, this is kind of interesting because the XLE kind of performed exactly as we thought it would, okay? You know, it broke the upper band here back in January, pulled back and basically found support right around the mid-band, all right? And then once it finally started to move, where did it go? It went right back to the upper band, hit it the other day. And now it's pulled back a bit. So I expect the XLE to pull back. But I also believe that the trend is now strong, okay? So I don't know at this point, I don't feel that the drop is going to be that significant. Okay, now we scale down to the 60. You see the 60 in a strong uptrend. Now, again, we have the confirming lines above and below the 78.13 line. 77.35 on the downside. And by the way, yesterday it even closed below that. All right. It did close just under the 78.13. But we know if we have two closes under 77.35, it should drop to 75. So, yeah, I wouldn't expect more than a two-level drop here, which would bring it down to 71.88. And then here's the 30 uptrend. Okay, got slightly oversold back here, oversold again yesterday. So we'll look at the XLE in a bit. Now, that's the PowerPoint I wanted to cover. Any questions on the PowerPoint? If not, then what I'm going to do is close it down and move on. All right, let me just see here. Just give me 1 second. All right, now, there we go. All right, now, let's look at, let me put up a monthly chart. I want to see first all right, let's see here. Oh, shoot. Yeah, the problem is you can't, okay. The problem is that it doesn't plot the extreme bands because there's not enough data. But what do we say? Let's take a look here. Here's the comp, okay. All right, the comp crossed to the upside, okay, right in January of 2017. So if we look at that, that's right here. Now that price level there is 123. So, I mean, you could have used the single off the comp to trade the Qs, but it's kind of interesting because right now it's 169. The close above was at 123, so that's a $46 move on 123, which again is 37%. So that's around 37% since the breakout back in January 2017. And you look here now, look what's going on here. You know, we're forming a bullish engulfment on the Qs. So I do expect it to go higher. Let me take a look at something, guys. Okay. All right, now, let's look at some of these earnings because these were really fascinating. I want to look at AutoZone first. Because honestly, this was the biggest one-day drop I think I've seen in a long time, okay? Gapped up, was above the upper band on the 60, right? Gapped up and was above the upper band on the 30. All right. Now, this is where it gets a little interesting because it's above the upper band. In one day, it ran from above the upper band to the lower band, which was what? Let's call it 600. This is $100 some odd drop in one day. Let's look at the 10. Way above the upper band. 10 is negative. Okay. Now the only problem with AutoZone is quite frankly, the options are really not all that great. But I think the takeaway here is we've got 3 time frames above the upper band, and speculating to the short side obviously made sense when all 3 were above the upper band. Just want to see something here too. Did we 30? Okay, not quite negative. It didn't turn. CMF didn't turn negative until it finally broke. But what's interesting about this is the 60 was in an uptrend. Okay, so once it dropped to the lower band on the 3 here. Okay, here it took it out, and at some point it was going to reverse, and it did. And what's interesting, yesterday that was up, I don't know, 605 was the low there. What do we say? Roughly 600. It's up about 20 some odd dollars off that low. I don't know if AutoZone had weeklies. I think they do. But it's funny. I looked at O'Reilly, okay, because it's in the same industry. If you look at O'Reilly, this thing dropped from 280 to 264 in concert with AutoZone. This, to me, looked like a little better short because the CMF was already negative on that. And look at that. It was above the upper band on the 10 and negative CMF. So it hit a high at 280 and dropped to 264 in concert with AutoZone's earnings. Crazy. It does have weeklies. I thought it did. But I know the options on AutoZone aren't really that great. They're pretty thinly traded. When I looked at it, I saw I think the slightly out of the money put was a 10 bagger. I think it went from like $8 to like 80. I was like, holy crap, that's some move. So if you speculated with one even, you turned $800 into $8,000 in one day. The other one I wanted to show, recent one, is this DY, because they also had a huge gap down. Okay. Now, again, what's interesting about this chart is, and again, I don't particularly advocate trading before the earnings, but if you look at this chart, the money flow was negative well before the earnings announcement, and I'm talking 2 days before it. Even though it's trending up, money flow was negative. It was indicating that, money was coming out of the stock. But I think the key takeaway on this deal is this. Let me try to point it out. This bar closed below the low of the first bar. All right, which, as we know, tells us, hey, you know what? You still want to be short, with expectation that this thing's going to trade even lower. Now the question is, how do you get in? Like how do you get into a trade like this? Because obviously we scale down to a 10, and the 10 never got overbought. All right. So the question is, how could you trade this to get in and enter this? Okay, we know we've had to close the low of the gap bar. Okay, which tells us, all right, the odds are we're still going to trickle down. All right, and I guess the only way to do that is to see if it rallies up to, somewhere within the confines of the first bar. And if we look at this, the low of that bar was 96.80. Okay, now, well, let's take a look over here. Because now I'm curious. The high of this bar, the high of that bar is 101.92, 101.91, sorry. The low is 96.80. So if we look at the midpoint of that, it's 99.36. And what's kind of interesting is the rally came back to 98.49. So it didn't quite come back to the midpoint of that bar. So the point here is that if you were inclined to take the follow-through trade to the downside, right, you could have looked for the midpoint, right, and then when it got up here and started stalling, you could have maybe put on the put. And your risk is to the high. So your risk is basically to 102, all right, which is what, about $1.50 risk. And then what's interesting is it dropped down to a low of 90. So you had about, what, an $8 swing, continuation swing to the downside. Kind of interesting. Let me close these down. But I'm always tinkering with these post-earning moves because, you can see the patterns are all fairly consistent. That's what I love about this. And, here's a deal, here's one, for example, last week, okay? HFC reported, here was the earnings over here, gapped up, moved up. The 10's in an uptrend, okay? So if we look at this, the first time the 10 got oversold was on the 7th going into the 8th at about 65. From that point, it was up about 350. Now, let's see if it continued higher. All right, so let's take a look here. That swing low is on the 8th, which is back here, okay? So we look at that at 64.50, right? Let's call it 65. And it's gone up about $10, that swing, since that point. That's really interesting. Here was MLM. Here were their earnings. 10 crossed up. Right? You had a couple of situations where it was oversold, and it just kind of continued to trickle up. So this is about a $16.21 swing on MLM. All right, so it kind of stalled right around 220. All right, so it actually trickled up higher since that chart was produced. Anyway, you're starting to get the picture because this is what I like. And, it seems to work even on a small bullish gaps, okay, like this Acacia. They always the cross up on the 2nd, oversold after earnings. Earnings moved up and sold off, and then, found support and just kept going up. Let's see, AF book. Okay, here's Facebook. Now, there's the earnings on Facebook, the big gap up, right? Pull back, day 4, it was oversold. At that point, it was trading about 170, and, you look at this chart, there's a $12 swing off their earnings or post-earnings. And here's Alexion. Gap up, trickled up, pull back, 112. A couple of days was up $7. And then here's Amazon. There's their massive gap. Day 5, it actually got oversold at 1546, ran up to about 1600. I want to see if it took that out. All right, so now it's back to 1604. So it did peak around, that's the 9th. Okay, so it peaked around 16.15. So it trickled up a little bit more, and then it corrected again, and then, continues to bounce off the support here. Interesting. And then here's Baidu. So again, here's basically the same pattern as Amazon. But I think the takeaway here is this. If we have a bullish gap and that stock basically sells off, as long as the 30 trend is strong, is bullish, or the 10 is bullish, you want to continue buying the oversold condition. And for example, on Baidu here, it got slightly oversold at a pivot low at 245. So again, that's about a $20 move in a couple of days. Which, as we know, if these things have weeklies, which certainly Baidu does, this is a nice trade. So anyway, that's what I wanted to cover today. And as I said, I'm completely enamored with these post-earning moves. So anyway, any questions? Let me see. I don't know. I was looking earlier today. There was one I saw. UVV. This had just a massive gap up. Look at this gap. Trading about 48 before earnings, and now it's up almost 28% in one day. I want to take a look at the daily. All right. Now, this is kind of interesting because the daily had negative money flow. The 60 had negative money flow, but yet it just screamed up. Now, the only indication we would have of a big move, to me, is this ADX line. If we look down here, it dropped down to 11.12. Here, down 11.84. When this ADX line drops under 20, and the lower the better, by the way, I usually expect a big move ensues. Now, certainly that happened here. But, I don't know if I'd have a directional bias on this stock. I probably wouldn't. But, but trading this before earnings, the only way to really capitalize would have been to do a strangle or straddle. Because you look at this chart, I really don't have a directional bias. I have a bias for a big move. That's about it. Okay, well, listen, I think I've covered, that's what I wanted to cover today. The earnings to me was the critical thing. You have the price levels from the handout, so, you can always refer back to that. But I want to just take a quick look. All right, no, I don't see any questions. So I tell you guys, I'm going to close down for today, and we'll convene again in 2 weeks. Thanks for being here. Enjoy the long holiday weekend, and you'll see the update will come out Tuesday morning. Thank you very much.